You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. If you're paying $0 to trade options, you're paying too much. That's because at public.com, you can go a step further and earn rebates on every single contract traded. No commissions, no per-contract fees. That's table stakes. When you place an options trade at public.com, you not only don't pay, you earn a rebate. And those rebates can add up fast. Public is the only options trading platform where you can earn rebates. You literally won't find a better deal. So, switch to Public and start getting rebates on every single contract traded. Or stay with your current options trading platform and leave money on the table. The choice is yours. Public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures and podcast description. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is time to roll the vol train onto the tracks and see what is popping off in this ever surprising world of volatility. Yes, it's time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the optionsinsider.com. Reminding you, if you want to join us for the official Vol Views after party, known as Options Oddities. Man, another banger last week. So many trades to take off from last week's oddities. Some just popping off, closing on Monday. So we'll get to all that fun, what we close and everything else on oddities a little bit after the show. So, of course, if you want to join us, theoptionsinsider.com/pro. Congratulations to Joe Lewis. Took home the February Pro Trading Crate this week. You want to get your name in the hat for the March Crate. Trust me. And, of course, check out the Pro Q&A we did earlier this week with our good buddy Scott Nation's been on the show a few times recently. We went deep into vol, as you might expect with that, so tackled a bunch of your crazy questions about all things vol. I'm guessing if you like vol, you're listening to this show, so it might be a good time to check out the Pro, theoptionsinsider.com/pro, the place to go to learn more as we learn who's joining us on the old Vol Views program for this wild and woolly Friday. First, Dick Green, my goodness. All right, we'll get there. First, joining us from the Southern Volatility Mecca, known as Austin. Haven't chatted with him in a while. He is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show. How go things in the Southern Volatility Mecca?
Well, it's definitely been a experience the last couple of weeks. I disappear and the market goes to hell in a handbasket. I come back and we go from down 70 to up 4. So I must be the four-leaf clover that the market was looking for on vol views.
Apparently, because you're right. The Bulls taking the bit in their teeth right now. We'll get there in a second. First, We welcome back from his global travels, hunkering down in the international vol mecca known as Germania. We welcome back once again our good buddy, Mr. Dr. VIX, a.k.a. Mr. Russell Rhoads, now holding court at the Kelley School of Business. Mr. Rhoads, welcome back from your global travel, sir.
Thrilled to be back. I think I finally shook the jet lag. I don't know what the pattern is when Mark Sebastian it disappears, but I really do think, and correlation is not causation, but I do think there's a correlation between excess volatility in the market going nuts and me leaving the country. I really do.
They're like Russell's outside of our borders. We've lost all grips.
I just
wouldn't surprise me.
Yeah, I mean, it's happened before, it happened again. So there.
All right, listeners, will it happen again during the show? You know, things are looking wild. Let's get to it. A little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down what the hell is going on this week from a vol trading and trending and analysis and unusual activity perspective. And man, strap in, folks. It's been a wild week, and it continues yet again. Today, yet another great example of why we can't really prep vol views more than 5 minutes before the show. All the stuff we had written in there. Had to change it all right as the show was starting because just madness. This has been a week of madness. It's been a couple of weeks now, really, of madness. If you've been out there slinging, you're listening to a show like this, I'm guessing you probably are, then you're getting used to these intraday whipsaws, the aggressive gut punch that kicks off the day to the market. Then we turn around equally aggressively midday. Maybe by the end of the day, we turn around again. So it's head fake after head fake. Just a lot of madness. All of that translating into a lot of volatility. We've seen that play out a few times already this week, listeners. And coming into today, we are seeing it yet again. Just wild roller coaster markets, truly. When we kicked off the show, right before showtime, listeners, we were down, to 56.67 in the S&P. So blew through 5,700 to the downside, listeners. Didn't stop there. Tried to bounce off it ever so briefly. Then kept selling off. 56.75, I should say. The hell with that. Blew through all of it. Bounced off about 56.67. And then Powell and company comes out. Powell, not usually one to throw some cold water on the flames of the market, but seemingly did so today because the S&P has now rallied. We're threatening 57.5 right now. S&P, after a day where it seemed like we could easily say, we're right across the board for vol views today. Nope. Wipe all that off as the market, that's right as the show started, all the major indices that just ticked green, ever so briefly, but they had just ticked green. So we went from a decidedly red day to now a green day, even though NASDAQ's kind of wavering right now. So the S&P right now, kind of flat to unched, slightly green. Dow up about 0.2%. NASDAQ flat to kind of unched to slightly down. NASDAQ, they had the bit in their teeth to the downside as well. We were talking about on TWIFO yesterday, I think it was Market Watch who called it a sum of all fears sell-off in the NASDAQ. So perhaps a bit hyperbolic, but nonetheless, wild times out there. Yeah, so it was looking like a terrible end to the week, listeners. Where the markets were right before showtime, we were off, about exactly 5%, just over the past 5 sessions. We're still pretty much in that ballpark, but bouncing a little bit off the lows. And of course, it's been a rough year so far as well. Obviously, we've erased all of that post-election love we've had out there. S&P off over 2. About 2.3%. We were off even more earlier today. So a wild time out there. VIX cash, right before we kicked off the show, listeners, was at about a 26. In fact, it's had a wild range this week. 1934 to the downside, over 26 and a half. 26.56 is as high as it got today. We were at about a 26 right before showtime. Then this whole turn kicked in, and S&P, or I should say VIX, as we kicked off the show, was at about a 25. Still up 3.5 points from where it was this time last week. And dare I say it, we're flirting with it again right now. We're a little bit below it, 24.75 right now. So I don't know. Technically, we are below the logins cutoff. I know a lot of you were looking forward to a little bit of logins on the show. Tell you what, maybe I'll have our editors cut in some for the podcast, folks, because we were there right before showtime. It seemed like it was going to be a big logins episode. So far, not so much, but I know some of you were looking forward to it. So maybe right about here, I'll have our editors cut in a little bit of danger zone just for you folks to get a taste of what I know a lot of you are missing out there. Volley, our buddy Scott Nation's metric, 2260, right before we kicked off the show as well, puts it up 4.6 points from where it was this time last week. That one now coming back to earth as well, 2120 as we're talking right now. So giving up 1.4 points on that, so up 3.2 points now on the week. And everybody's favorite VVIX, the vol of vol itself, 118 right now, up about 5 points. It was up higher, got up to 128 at one point earlier this week. The range on the week for VVIX, 106 on the downside, 128 on the upside. So just a wild week, and we're not done. We could be back down 1% by the end of the show, or up 1%. I mean, these are truly, truly wild markets. Let's go around the horn the way we started. Let's go out to the Southern Volatility Mecca first. Mr. Meatball, just a ton to unpack here, sir. What is catching your eye?
Yeah, I think the big piece is how much the market is actually moving on a daily basis. Average true range for the S&P 500 as of this morning on a 10-day rolling basis, averaging 94.44 points of movement a day. That's approaching a 2% price in for movement. We're talking like 1.7%. The market is pricing it is moving every single day. And, you know, if you look, I mean, we've been doing that. Today we've moved 100. We moved, you know, the high to low on Thursday was 101 points. We moved 120 on Wednesday, almost 200 points on Monday. I mean, it's just, or on Tuesday, massive 140 point day on Monday. So we are moving a lot, and the S&P is trying to hold the 200-day moving average, which it's kind of sitting on right at 57.33 is where that moving average is. But within that, you know, the weird thing has been the strength in Apple. I continue to look at Apple as having replaced treasuries in terms of where money goes within the equity markets when it's scared. You know, Apple is a cash cow. Their debt, I think, is cheaper than U.S. Treasury debt because they actually have a balanced book. And, you know, on a day like today, it's up 2.4%. What I'd like to see to know that, hey, maybe we're at an end would be the market up big and Apple down. But we're not obviously getting that today. The other interesting piece, Broadcom blew the doors off of earnings. And if you look at where it was prior to its last cycle, it closed on the 12th of December. And this is just to kind of lay out how the mood has changed. They reported knock your socks off earnings. Next day, it went from 181 to close to 224 overnight. That is a 44-point rally. Overnight, it got as high as 220 and is sold back. It's only up $12. So even just knock your socks off earnings in this environment, you're not getting the same kind of pizzazz that we were getting, you know, only 3 months ago.
Yeah, I'm looking at it right now. It's had quite the range. AV Go is going again today, listeners, but it even sold off at one point when everything was really The Bears had full control, listeners. AV Go was selling off down to 182 and 3/4. Back up now to 191 and a half. So even a good number, no indication you could stay green on a rough day, especially when that giant sucking sound is sucking everything else down along with it. Mr. Rhoads, you left the country and the markets went to hell in a handbasket, sir. What's been catching your eye in this just extremely tumultuous week in volatility, sir?
I think caught my eye as I went Monday morning. We were had volatility and all that kind of stuff, and when I go searching for weekly trades, it seems like the Monday pattern has been lots of bearish on VIX. Taking advantage of the spike. Didn't see the same type of trading this past Monday, and I was on with our buddy Jill Malandrino, and I made a comment around that. I said, this time it just today, this past Monday, it just didn't feel like that they were fading the volatility move. That either they're happy with how much they've made fading the move, etc. If they didn't, they're pretty happy because VIX has spent a lot of time in the 20s this week. But that was that early in the week. Isn't it great? The Monday morning quarterbacking. Oh my goodness, I saw that. I should have doubled down on all my shorts. But it just was interesting. It just felt different this past Monday. And, that different feeling has worked its way through to the rest of the week. Excuse me. On the Apple thing, one of the things you want to look at with respect to Apple's got this 30-year bond outstanding that I believe that has a higher credit rating than the U.S. government. And that's because they have the cash set aside for the bond. The cash is over in Europe. It's a way that they're able to repatriate some earnings and not pay taxes on it. And that thing's got a 4.85% coupon. And you can buy it right now below par, which means effectively your coupon would, or your return, your yield to maturity would be over 4.85%. That looks like I think that makes a lot of sense. I know we went from talking about volatility to equities to corporate bonds, but since the company came up, and you can see. That it seems to be a flight to quality like U.S. Treasuries used to be. So I do think that they're attracting money and there's a flight to quality, but I think it's definitely, it may be going into the bonds as well as the stock, just to coattail on what Mark Sebastian was saying.
All right, I do see there is some disappointment in the chat there. They're not going to get some live logins. All right, so I'll see what I could do. I don't know if I have... Technically, we are still below the 25 threshold, so it does feel like cheating a little bit. But you folks, right before the show, it was north of 20. So I know some folks were excited. I don't know if I have it on the setup in here. I'll have to go look. But in the meantime, while I'm looking for a little bit of logins for you folks, listeners, Mr. Rhoads, you did the global yeoman's work for the Vol crowd. You went overseas, so we didn't have to, sir, to check out the big international Vol summit going on over there in Germania. I've heard interesting things about it. Give us a bit of a breakdown. What did you see out there? What was it like? And what were some of the big hot takeaways out there this past week, sir?
The thing is freaking massive. It's 4 times the size of SIBO's RMC, which, that just to give you two guys a little bit of a perspective on it. And, the main sessions is in an auditorium that easily seats a couple thousand people. It's just, it's extremely overwhelming. I was on a volatility panel and we did and I'm gonna mess with you two a little bit. So both the Marks stick with me here. I did a hand raising survey. And basically, I was, and keep in mind, this was last week, not this week. And basically, it was raise your hand if you think we're in a low volatility regime, if we're in a mid-range regime or high regime. And only one person said low, everybody else said mid, nobody said high. And so, and that's that I kind of expected a little bit of mixture in there. And so then I said, all right, well, let's go off script here. Who thinks we're mid going high and who thinks we're mid going low? And mid going high was everyone. Nobody thought we were heading toward a lower volatility regime. And, I got to pay more attention to stuff like that. And, down another Red Bull and pop another Adderall when I'm up all night trading when I'm in Europe, and take advantage of those types of things, because goodness gracious, was that crowd right? We definitely, and it didn't take very long, did it? So that was that was a major one. There's really a big Europe is starting to. I'm not going to say they're ever going to surpass us, but they are really doing some good catch up with respect to getting. And I hate the term retail, but pro-tail is what I like to refer to it. Like I think of the folks that are trading their individual accounts that aren't in the financial industry that are listening to us right now as better than a retail trader. So there's a handful of individual brokerage firms that you hadn't heard of over in Europe, and they are doing a great job of educating folks and getting more retail volume into the market, which is something that you always want, that the liquidity providers want to see, et cetera. So, expanded retail, and everybody's thinking that long volatility off and on throughout the course of 2025 is going to be the place to be.
All right, and speaking of things that the people want, nay, demand. There it is. All right. I hope you're happy, folks in the chat. I'll try to keep it low so it doesn't blow everyone's out. But yes, a little bit of the logins. People have been waiting for a long time to get a taste of the danger back here on the show. So I hope you're happy. See, you folks in the chat, you ask, and how nice am I out there? Even though we're technically below the legally established logins threshold, nonetheless, ask, and you shall deliver. It does kind of feel right, though. I'm with you. It does. It's been a while since we've had a little Kenny on the show, and I've kind of missed him as well. So all right, let's keep rolling here, accompanied by our good buddy Mr. Kenny. Let's go out to the land of the volatility service. This is another one. We've had like 15 snapshots of this already. Had to keep updated. I'm calling it right now. No more snapshots of the VIX futures. What we got is what we got. You can't keep chasing this damn thing all over the place, because that's what's happening, as you might imagine today, listeners. We're whipsawing all over the place, and the vol surface is reflecting that. As of our latest snapshots, we had the front portion of the curve looking at about March future, about 2240, puts it up not quite 3 handles, about 2.9 handles from where it was this time last week. And we had the April future up at about, where are we here? At about a 2145. That puts it up almost exactly 2 points from where it was this time last week. So obviously looking frothy, looking juicy. If we go farther out, July hits the 21 even level exactly. So we have an interesting little plateau. After we have the front portion of the curve, backward as you'd expect. Then we hang out at 21 through July. And then we kind of hang out, looks like at 21 through most of the rest of the year till November, 21 and a quarter. So kind of strange how we have this flat plateau for pretty much the rest of the curve, which is, again, kind of interesting. Mr. Meatball, we'll start with you, sir. The curve is obviously all over the place, but what's catching your eye out there as of this second, sir?
I mean, the futures curve did everything it could to avoid going into backwardation, and finally kind of gave in this week. But still, you've got a nice spread between March, which doesn't have a ton of time, and that front month. The back end of the curve still very flat. VIX has been, there has not been this race for protection on this sell-off at all. And that has been what I think has thrown a lot of traders off, is that, we haven't seen, these massive put chases in the overall market. And, we haven't seen the crazy, up and downs of VIX. It's just been kind of a slow, steady push higher. Our friends Mike and Matt Thompson might say this is more of a VIX swelling event than a VIX spiking event. But those VIX swells are what lead to really bad things. So I will say that this is the first time in a long time that I've looked at the market and said, boy, we could actually drop 20% here pretty quickly. I don't know what would cause that, but that VIX curve is pointing toward potential and VIX movement is pointing toward, the potential, not the certainty, but the potential for a true correction.
Yeah, it is interesting times out here. As I tell you what, I'll re-rack the logins for you here, listeners. For some reason, it wants to do something else on me here. There we go. All right, so yes, you're right. That's something we've been talking about for most of this week here on the network, is that, it's been how many years now people have been as the old hashtag BTFD market, and it's worked 99 times out of 100 over the past few years, certainly post-pandemic. This is one of the first times people are really coming on and saying, I have little to no confidence in buying that dip right now. And you could certainly see why. Mr. Rhoads, same question for you, sir, as our buddy Mr. Loggins. The dulcet tones of Mr. Loggins serenades us. What's catching your eye out there, as we are definitely flirting with the danger zone, sir?
Specifically, is the danger zone? What number are we looking for?
25.
25. Oh, I don't know if we're going to get there. So I'll go spread.
We were there until we weren't, sir. So technically we were there earlier.
We were there earlier.
We're there. Okay. All right. Well, I'm just looking at it from right now. I think I don't quite understand why we keep I don't understand the action at all. And I cannot, and this is one of the conversations I had the same conversation multiple times last Thursday over in Frankfurt. Can you guys remember, and of course it's not happening this week, but leading up to this week, can you remember so many instances of buying in weakness, midday working so dramatically? Now, I know when we're closer to a market top, we tend to have excess intraday volatility, as people, you've got a lot of people with differing opinions there, but, it's once a month or so we might have one of these days where we're down midday, you go out to lunch, and which is amazing because I'm not a trader anymore. Go out to lunch, come back, and oh my goodness, look at what happened to the market. Or I'm over in Europe and I go to bed before the market closes, wake up the next day and goes, are those numbers right? So I just don't remember the market being as violent intraday. And I know Mark Sebastian mentioned the true range at the beginning of the hour, but I can't remember. And I'm trying to figure out the best way to go about quantifying that.
I haven't thought, it hasn't been this volatile intraday since 2008 was kind of what I was thinking.
It's been a long time.
I mean, the reversal, what I'm telling my traders is what happens between the opening bell and 1:30 Eastern in the afternoon is completely unrelated to what the last 2 hours of the day look like. It's almost like we have two markets. The market kind of does what it will in the morning, usually drops, then rallies, then drops again, and then at the end of the day, after right around now, the market makes a decision on what direction it's going to go and sticks to it. If you traded with trend, starting around 12:30 in the afternoon Central, 1:30 Eastern, you've done very, very well. So that's kind of how I see the market moving right now on an intraday basis.
Yeah, if you're quick on the intraday trigger finger, listeners, these have been interesting markets to say the very least for you out there. Is it interesting out there in the big dog VIX options? Well, I'll give you a hint. The ADV is back up to 918,000 contracts a day. That should tell you something. We were kind of languishing there for a while. This past week, it shot up almost 140,000 contracts a day. So, yeah, we're putting up some numbers. When I break down the daily activity out there, you're going to see exactly what I'm talking about. Weirdly enough, today, one of the kind of laggards of the bunch. But again, we're still getting set up for the day. We'll see what the second half has to bring us. Today, though, we're still a respectable 557. It's just we've seen a lot more than that on many other sessions out there so far this week. In terms of top 10, how are we looking out there right now, listeners? If you were hoping for some puts to break in to the sunshine out there this week, that's not the case. We are 9-1 calls over puts in our big boy VIX top 10 TM indicator, listener. Let's see if we could find Waldo together, shall we? Number 10, listeners. All the way at the bottom of our list at number 10, listeners, we have the March 30s, our old pal, the March 30s. These were much higher up not too long ago. 212,000 of those bad boys are coming in at number 10. Number 9, 213,000 of our old pal, the 42 half strike. Pick a month And chances are there's size open on the 42 half strike. In this case, we're going to April 1st, 213,000 contracts. On the list, number 8, 218,000 of the April 35. So if the 42 half's not doing it for you, here you go. April 35 is number 8. Number 7, 218,000 of the April 40s, 4 Number 6, now we're getting fun, listeners. 228,000 of the May 75s. As you'll recall, those May 75s, that was one of the strikes that went up last week in that extra wild VIX super stupid that I was chatting about with the Flow Master and with our buddy Matt on Vol Views last week. Just wild stuff. I really can't think of another VIX crazy super. In fact, our buddy the Flow Master, I was talking to him about this yesterday. He said he's created a little script behind the scenes just to track this trade in particular. It was so fascinating to him, and he was searching the database this week, and he can't find much else analogous to that trade going back quite a while. So 5-6 legs of super stupid to the upside in VIX. Kind of rarefied air out there. Number 6, 228,000 of the May 75s. Number 5, 231,000 of the April 20s. Waldo's hiding all the way up here at number 4 this week, listeners. It is 283,000 of the March 17 puts. What kind of madman would have the March 17 puts in his back pocket? A crazy person. A wild madman, I say. Number 3, 310,000 of the March 25s. Number 2, 330,000 of the March 20s. And the big dog on the books this week, 427,000 of the August 42 halves. It is now time for us to say goodbye to our friend Mr. Loggins, because it's time to welcome back on for the first time in a couple of weeks, Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, have at it, sir. If you've recovered from your jet lag sufficiently, what's catching your eye on the weekly VIX front this week?
Hey, I have recovered, and this is pretty good. There were a ton. Oh my goodness gracious! I had my pick of weekly trades to choose among. The block trades on Monday and weeklies on the Bloomberg screen went 4 screens, which means there were almost 80 block trades using weeklies just on Monday. This was an old trade. This is Monday. I'm going to tell a story. I know that Monday was not February 4th, but back in February 4th, somebody bought 6,000 of the March 5th 20 calls, and they paid $1.15 for those back when VIX was at 16.95. I think I got their exit trades. Starting last Friday, it looks like they sold 2,000 at $1.30. Monday, it looks like they sold around 3,000 at $1.57. And then Tuesday, it looks like they sold the final 1,000 at $3.12. So that sounds wonderful, does it not?
That sounds delightful, sir.
Sounds delightful, sounds wonderful. DRO was 24. If they just held on to the freaking things, they'd have gotten a payout of $4.
I got to tell you, with all this activity, I'm surprised we're not seeing more activity in the weeklies here, because if you want that direct exposure to VIX movement, you can play in the March, or regular, the March 12 calls that expire on Wednesday. I'm surprised there's not more activity in there. I feel like that would be a great way to manage risk. There is some decent open interest for next week, but nothing compared to what you see for regular March. Like I said, I'm a little surprised we haven't seen some of the activity move into the weeklies, Russell.
Well, my favorite open interest on the weeklies is the 99 March 12th 100 calls that are open right now.
Oh, yeah, I see those. There's 6 of them, traded today.
I'm going to get into those strikes. I never get into those strikes with weeklies.
One of the 95s is traded today.
That's on my list. That's actually one of the last trades. All right, let me get back on pattern, because we'll end up doing like Andrew and eating 20 minutes. Let's see. Tuesday, somebody, and this is an exit trade as well. Tuesday, somebody sold the March 12th 13 calls for $8.83, and they bought the March 12th 14.5 calls for $7.39. That took in a credit of $1.44. That was Tuesday. Went digging, and found that they had put that trade on for $1.35. So they made a whopping 9 cents. This is another one. I would have. What do you guys think the odds are that Mark? Are you gonna bet young Mark's tuition that VIX settlement will be above 1450 next week? I think it will be.
So I think that's a relatively safe assumption.
Yeah. Although, I mean, I don't know if it's worth 6 cents, but
no. Yeah. But what I would say is, like, is it impossible for it to close below 14.5 next week? No.
So we're not going to risk that child's future. All right. Also on Tuesday, VIX up, starting to work its way higher, 2208. Kind of like this trade. I even like it. I like this trade for a lot of reasons. Very, very late on Tuesday, and this is totally a settlement trade. With VIX at 2208, somebody sold 200 of the March 5th 24 puts that settled the next day on the open for $2.57. So their break even on it was 21.43. They just needed a settlement higher than 21.43 to make a profit. This may be the greatest VIX trade in history because VRO was 24.
The greatest VIX trade in history.
Can you tell me has there ever been a more perfect trade?
Oh, that VIX Super Stoop is looking pretty good right now. So I don't know, but
I mean, this one it's like, yeah, I'll sell the 24 puts. They're a little bit overpriced relative. And lo and behold, they get settlement right. The best peg trade in VIX ever, right there.
In terms of bullseyes, this one's pretty good. You're right.
Yeah, that one's pretty good. All right, Wednesday, we start moving into the March 12th options. This is an opening transaction. Somebody expecting us to come down next week. Somebody bought 500 of the March 12th 18 puts for 25 cents. They sold 1,000 of the 16 puts for 3 cents each. So the opening is 19 cents here. And they're okay. You know, we're betting Mark Jr.'s tuition that we won't be below 1450 next week. But I don't know if I would have sold the 16 puts. Why not just pay the quarter? You know, and part of the reason is trading out of it. If we do get, if the S&P 500 rallies 2 or 3% Monday and Tuesday next week, and VIX starts to come out under a lot of pressure and overshoots or shoots down to 16 or so, you're not really you're going to have to wait until expiration to get out of the trade because you got to buy back both of those 16 calls. And I feel like I wouldn't have sold those calls. I understand lowering the price by 6 cents, or I'm sorry, I wouldn't have sold those puts. I understand lowering the price a bit. But again, you want to be able to trade out of your positions in the VIX arena, and that might be if VIX were around 16 next Monday or Tuesday, I don't think they would be really happy with what they're getting to get out of the trade. So, and then now we're getting into the big strikes. VIX at 2191 on Wednesday. Somebody sold 100 of the March 26 65 calls for 20 cents. The highest ever VRO is 69.76 back in the 2008 timeframe. So they could lose, I guess, based on history, they could lose $10 on that if we get something really bad over the weekend. Thursday, with VIX at 2339, there's our 95 calls. Somebody sold 500 of the March 26th 95 calls and took in a dime, and that is not part of anything else as far as I can tell. And then later in the day, with VIX up at 2516, somebody came in and bought 100, and this does not appear to be combined with anything else, bought 100 of the March 6th 70 calls for 23 cents. I'm not rooting for that trade. I'm just not. And then today, in about 4 blocks, and kind of like this trade, in 4 blocks with VIX at 2370, between 2370 and 2405. Somebody bought 950 of the March 12th 23 calls, paid $1.58 for them, and sold 950 of the VIX March 12th 33 calls for 28 cents. Net $1.30 and break even on that trade if they hold it through next week's expiration. It's going to be 24.30. I wouldn't be surprised if VIX moves a bit higher if they sell those 23 calls and then maybe buy way out of the money calls and let those 33 calls die on the vine.
Wither and die on the vine out here, listeners. Let's see what's withering and dying. Is VIX options volume withering and dying this week? The answer has been a resounding no. Today, actually, weirdly enough, one of the more quiet days. But then again, we still got some time to go. We could easily equal what we've been seeing out here the rest of the week. So far today, right now, 580,000 contracts on the tape. Listeners, the big dog March 20 puts. About 40,000 of those bad boys have gone up so far today. I was just looking at the price range. They've traded in a wide range today, as you might imagine. 62 cents to about 93 cents, so over a 30-cent range on the day. Buying and selling at all those different prices throughout that range. You like those, listeners? 20 puts going out on the 18th for between 62 and 93 cents. Would you be a buyer or a seller somewhere in that range? I'm curious. Number two, I was just talking about these earlier, the March 17 puts. These were trading for, a nickel, if not less this morning. 35,000 of those bad boys going up today as well. 32,000 for number three of the March 25s. Number four, 26K of the March 18 puts. And number five, 21,000 of the March 40 calls, 4 O's. Yesterday, a banger day, 1.22 million contracts on the tape. The big dog, 95,000 of the March 19 puts. We talked about these yesterday. That included a massive block. They started at 30,000 and kept going up from there. In fact, we talked about these on the option block yesterday. We saw a big block going up right as the show started, 30,000 of them for 55 cents. Paper was buying them. We said, are you folks a buyer at that price? Are you a seller or not interested? That poll just ended, listeners. And 55.6% of you say you want to buy those bad boys. 14.8% say you want to sell them. And 29.6% say you are just not interested. Those puts right now, if you liked them at 55 cents, listeners, 41 at 44 cents. They got as low as 25 cents this morning. So if you liked the 19 puts, that was quite the sale there earlier this morning if you wanted to pick up some of those bad boys. If you are so inclined, as nearly half of our audience clearly is. Number two yesterday, 61,000 of the April 20 puts. Number three, 56,000 of the March 18 puts. Number four, 47K of the March 20s. And number five, about 38,000 of the March 17 puts. Wednesday, another banger day, 1.53 million contracts on the tape. The big dog, back to our old friend, the 42 half strike. In this case, it was the August 42 halves. 200,000 of those bad boys going up on Wednesday. So, yeah, a little bit of action to the upside. Followed by number two, 126,000 of the March 30s. It's our old pal, the March 3060, because number three, March 60s, 101,000 of those. Number four, 99K of the May 35s. And number five, 99K as well of the May 75s. Worth noting, it was definitely opening on the May 35s, but we do have some OI now on those May 75s, thanks to that super stupid that is kind of gumming up the works there. Tuesday, we haven't seen a day this hot in VIX in quite some time. 2.45 million contracts on the tape. So you add up a banger Wednesday and Thursday, and Tuesday almost beat both of them combined. Just, I think the technical term is redonkulous paper here, listeners. The big dog, 230,000 of the March 30s, and again, the other half of that, the March 60s, 157,000 of those to number two. Number three, 108,000 of the April 35s. Number four, 102,000 of the April 75s. So we have some vertical action opening on both of those strikes, I might add. Number five, 101,000 of the March doubles. March doubles. That's an interesting one. And then Monday, 1.2 million contracts. So pretty much banger days every day this week. You can see why today looks a little bit light by comparison. The big dog on Monday, 82,000 of the old April 20s. Once again, followed by number two, 61,000 of the March 23s. Number three, 56,000 of the March 30s. Number four, 51K of the March 16 half puts. And number five, 41,000 of the March 17 puts. Mr. Meatball, it's obviously been a whirlwind on the VIX options front. You put up almost a week's worth of paper just on Tuesday alone. So there's a lot to talk about. We could spend several days talking about all the paper this week. But that said, are there any real highlights that stand out to you as you look back on the wild tsunami of VIX options paper this week, sir?
I mean, there was a ton of volume on the VIX options paper. On Wednesday, we had a huge ratio spread go up that I thought was kind of interesting. Russell, I don't know if you saw this, but they traded 50,000 of the August 21 calls. It looks like they bought those. And then they sold 250,000 of the August. No, they sold 200,000 of the August 42.5 calls. And at the same time, they traded 42,500 of the April. They traded 50,000 of the April 42.5 calls at 73 cents. So it was like a weird 1x5. We also had some huge March and May call spreads go up on Friday on Wednesday. It looks like the trader sold to close the March 30-60 call spread and bought to open the 35-75 call spread. They did that swap 100,000 times. So Wednesday was definitely the day for volume. It was really, really busy, a lot of repositioning. I'd love to say monetization, but I don't think selling the 30-60 call spread at 70 cents made them a lot of money. They're probably hoping for another leg higher.
Yeah, a lot of stuff going on out there. People hoping for another leg higher also out there in good old SVIX this week. And let's see, did they get it out here? Listen, well, obviously when we were popping hard in SVIX land, the answer was no. We are still net down on the week right now, listeners. Down almost 3 points, 2.9 points at about a 2060 right now. Worth noting, though, we have moved a little bit. In terms of range on the week, it's been a bit of a wild one. We dipped as low, looks like today, as about 1970. And the high from earlier this week was about almost 2470. So talking about exactly a 5-point range on the week. Most of that to the downside in SVIX this week. So kind of wild stuff. Speaking of wild stuff, we're actually seeing some paper out there right now. 16,000 contracts on the tape. Lo and behold, all it takes is the market whips on all over the place to gin up some paper out here in SVIX. The ADV continuing to move back in the right direction. 6,900 a day now, up 1,600 from this time last week. It was threatening to circle the bowl just a couple of weeks ago out there. And we'll also throw in the evil twin of SVIX, that is UVIX. 41 right now, up 7.25. Of course, it was much higher just earlier today. I think when we kicked off the show, it was at about a 44. Got up to a 45.18 this morning. That was actually the high for the week. So UVIX listeners has had a range of about 30 double to the downside and 45.18 to the upside. So closing in on a 15 handle range on the week. So UVIX, just a wild beast these days at about a 41 even right now. In terms of action out there, are we seeing a little bit more paper on the tape out there? The answer is yes. 14,000 contracts on the tape in UVIX. The ADV also ticking up, but ticking up slightly, up to about 17,000. That's up about 1,000 from this time last week. So we'll see if we get a little bit more action out there today. Maybe that will keep that number moving in the right direction. Mr. Rhoads, we'll go out to you first, sir. What's catching your eye in the evil twins of the vol market this week, S-VIX and U-VIX?
Well, SVIX is doing what it's going to do with volatility higher. It's at least they're doing some decent volume on the ETF, but again, the option market it's just very difficult to deal with that fund, and I might have to say goodbye to my friend SVIX in the near future.
You're done. You're washing your hands. Wow.
I might. Well, I'm not sure what I'm going to do with it. One of the things that I want to do when I've owned these funds is I want to trade options around them. That's just what I do. And it's just it's very disheartening to try and do that around SVIX. So I'm probably going to have to make a change.
Wow. Mr. Meatball, sir, you just dove full on into the SVIX waters. I think to say they've been choppy of late is an understatement. What are your thoughts on what's going on in SVIX and what Mr. Rhoads just laid down, sir?
Yeah, no, SVIX has been really underperforming. It has not done anything right lately. This kind of up and down volatility with intermittent big moves in VIX makes buy and hold SVIX very difficult. And Russell's right. The liquidity is not great past March. You can get stuff done in March. You can get stuff done next week, but April prices are way too wide. for my liking. And June, you look back in June and it's even worse. You can kind of trade April. Good luck in June. And I think that's the big issue people have with SVIX is the liquidity does need to pick up.
Yeah, I'm looking here right now, and you're right. You go out a week, and yeah, it's fine. It's a dime wide, 15-cent wide. That's not terrible, certainly doable. You go out beyond a week, listeners, and things, as the meatball alluded to, things start to get a little bit wider and rockier out there. Mr. Rhoads, you've been mulling over different ways to attack your super secret weekend UVIX trade. Used to just buy the underlying, a little bit more difficult right now. You were talking about doing VIX futures or even a VIX futures spread, or perhaps the options. What have you settled on these days, sir?
It's still just buying UVIX for the weekend. Haven't found a really good method of doing anything differently other than on the open and on the close. I mean, I've even tried, entering the trade a couple hours before the close, and sometimes that works. Sometimes that works. I mean, on the Friday before the close, sometimes it works, sometimes it doesn't. Changing things around just doesn't really make much of a difference around it. I've been really long individual index options based on some conditions, and because there's a relationship there, if I'm long options over the weekend, I'm not going to do the UVIX part, or I'm going to scale down the UVIX part. I haven't quite figured out what I'm doing this weekend yet. I'll figure that out after I get off the phone with you guys.
I was just going to say, if you're not doing SVIX anymore, that probably puts the kibosh on the UVIX, does it not?
It kind of does there, and that's another thing that I've been working on is what if you constantly own SVIX and combine it with buying UVIX just for the weekends? Is there enough canceling out there that's the best hedge? The best hedge on SVIX is just buying UVIX on the weekends. I just haven't finished running the numbers on that yet.
All right, listeners, could this be the end of the super secret weekend UVIX trade? Remember, secret. Don't tell anybody. Let's pop through some of the rest of the vol ETPs, and we'll get to the most difficult part of the show, the crystal ball. UVXY 24 3/4 right now, up about 3.4 points. Obviously, it was much higher earlier today. Got up to almost 2670, 2668. That was your high for the week. The low, 1966. So a $7.02 range on the week for UVXY. So quite the wild beast out here. And again, that's the neutered one of the two. Putting up numbers again today, 141,000 contracts on the tape. The ADV, 129,000, up 12,000. So, here we are lamenting the lack of liquidity in the other ones. UVXY says, hey, don't forget about me. I'm putting up some numbers. VXX also not to be forgotten about out there, listeners. Was 54.40 when we kicked off the show. Puts it up about exactly 7 points on the week. It has given up almost exactly 2 points of that now, 52.5, down 1.9 points. So it means up 5.1 points on the week. On the week, we've had a range of about 44.87 to the downside, 55.32 to the upside. So a wild range out there. Again, this is VXX as well, a product some folks have reasonably accused of being somewhat sleepy, putting up some numbers out there and not forgetting about it today. 74,000 contracts on the tape today. That is nothing to sneeze at. The ADV is 44,000. Now it's up 7,000 from this time last week. Mr. Rhoads, I know you're not a big fan of UVXY and VXX, but Mr. Meatball, I know you dabble in a little VXX every now and then. Anything catching your eye out there this week?
Yeah, it's had a really nice rally. It's at, got as high as $55 today, which would have been a high. Obviously, it's got a nice daily decay, a bullish decay with futures and backwardation. I'm surprised that it hasn't seen more volume in the options. I mean, there's some. The biggest trade today so far is a buyer of the 50.46 put spread in April. Looks like they paid about $1.20 for that. So that's $1.25. That's pretty bullish. That's bearish volatility, bullish the overall market. But I do think that some of this volatility is getting a little long in the tooth without a major volatility event. And so you're going to see some exhaustion players step in and start playing to fade this move in VIX and VXX, and VXX is a good way to play that fade.
And it's time for us to play the vol guessing game, listeners. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we get weird, we get wild, we get funky. We attempt to predict what the vol gods have in store for the coming week. And myself and the Oracle of New Hampshire on the show last week, listeners, we were both wrestling with a little bit of upside at the time in VIX, but I don't think either of us had anything this spicy on the docket. As we're coming into the end of the show, a VIX cash 24.33 out there, listeners. Actually, I just reran it right now, 24.18. Let's get the exact updated print. All right, 24.18 and good old. So VIX cash threatening the 24 handle now after being north of 25 when we started the show. Goes without saying, Matt and I didn't even have a 20 handle. I was at 18.45. Matt was at 19.06. I was feeling a little bit of juice would remain, but not much. And clearly not as much as we have on the board today. So we reset the target board for this time next week. We'll go out to Mr. Rhoads. You didn't have a chance to lose last week, so we'll let you go first this week, sir. What are you feeling for vol this time next week, sir?
I think we'll come in a bit. I'm going to go with 1947.
1947, a decent year if you're into rebuilding a continent. And is it a good vol guess? I guess we shall find out. Mr. Meatball, same question for you. We haven't had your palindromic nonsense on the show in a while. But what are you feeling for this time next week?
Yeah, that's a good question. Was this the top, or is there another leg here? And looking at how VIX has moved, just this slow, steady climb on kind of a daily basis, I'm not going to believe that vol's coming off until I see a day where vol actually really takes it on the chin harder, and not just because of the market rallying. So we haven't had that down market day, down VIX day yet. And that's what I'm kind of waiting for. So I am going to say 30.03.
30.03. Wow, you're getting funky with your palindromic, not 30.
Well, that's
handle.
palindromic.
I know. I'm saying you're getting funky with it, though. I like it. A little bit different. For 30 handle. Wow. Interesting. The meatball. Feeling some juice. As you were talking, this number kept rearing in my head throughout the second half of the show. I don't know why it spoke to me, but it did. 22.64, listeners. That's what I'm feeling. So we got quite the market. 1947 to the downside for Dr. VIX, who's usually playing the other side, usually playing the upside. I'm at 22.64, which is your Goldilocks market for this week. And then the meatball just throwing out the playbook saying, let's go, let's roll them bones. 30.03. Are you feeling a 30 hand? Let me look really quickly. We got 21s in the chat. Frank's at a 2019. The Queen, 24.02. She's usually pretty spot on. Oh, folks are freaking out about your 30 handle, Mr. Meatball. So, understandably so. I like it. Throwing a little bomb into the live folks. And if folks want to discuss,
I'm trading against my portfolio.
Hey, I've seen crazier things. And if folks want to discuss your 30 handle prediction with you or anything else, where should they go? What should they do?
Yeah, follow me on Twitter at OptionPit. Go to optionpit.com to read my daily posts. Subscribe to our YouTube channel. We're putting awesome content out there every day.
And Mr. Rhoads putting in some crazy upside verticals in our live chat over here.
Well, I'm being you never let me talk about VXX because you think I hate that guy. But I had been looking at buying deep in the money calls and selling an out of the money call as a substitute for the long UVIX thing. So when I explained in the chat how I would trade it today, because we were running out of time. But I'll probably spend a little bit more time on that and throw it up on my Substack this weekend and give an update on how the UVIX thing was working as well. And Substack, it's just my name. Twitter, it's just my name. It's just me, man. I'm not the weatherman down in Florida.
It's just me, man. I've asked you about VXX a number of times. You've always been very dismissive. I figured you just didn't like it.
Yeah.
If you want to talk VXX, I'll rope you into the conversation in the future. I'm just trying to spare you the ignominy of having to talk about a product that you clearly dislike.
I don't dislike anybody.
All right, there you go, listeners. If you're in the pro, you can see that sweet vertical Russell was just putting down there for all that fun. Speaking of being in the pro, if you're in the pro, you get to join us in the after party a little bit after this show to talk weird, wild, and wonderful trades. Man, a lot of stuff was popping off this past Friday on Oddities. We were already taking stuff off. I was looking, Matt was sending me trade alerts of what trades he was closing. Just on Monday morning, just on opening prints on Monday morning. That's how wild this market has been. If you want to play along, you want to get past the velvet rope, have a good time, if I do say so myself, head on over to the pro, theoptionsinsider.com/pro. That'll get you in for Oddities. That'll get you for the pro Q&As. That'll also get you for the giveaways and the pro podcast feed that has closing in on somewhere around 500 episodes waiting for you. See, the second you hit that button, you are awash in pro goodness, if I do say so myself out there. So check it out, theoptionsinsider.com/pro. For those of you on the on-demand side, that will conclude your broadcast week with us. I thank you for joining us. I will be traveling down to the Futures Industry Association Conference in scenic and sunny Boca Raton, Florida next week. So I'll be beaming into the shows. We'll have our usual schedule of shows. Don't you worry, listeners. But I will be doing a little bit of traveling, so I will be beaming in. So we'll see what that means for time zones and what we do with Oddities next week. Stay tuned for that. We'll give you an update next week. And of course, we're back here again. Same bat time, same bat channel next week for a little bit of the old volatility views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.